Welcome back to Vivi in the Valley, where we explore innovation not just for technology's sake, but for the human spirit. This is Crypto for Good, the series where we unravel how blockchain and digital assets can create real and meaningful impact beyond hype and headlines. Today, we dive into a critical turning point, the intersection of crypto regulation, political shifts, and real-world asset tokenization. And how do policies made in DC shape the very soul of blockchain innovation? To guide us through this complex landscape, I'm delighted to welcome Jason Brett. Jason is a former U.S. regulator from the FDIC who steered policy during the 2008 financial crisis. And now he's one of crypto's most respected policy experts, advising governments, guiding institutions, and educating global leaders on the future of digital assets. Jason, welcome to the show.
Thank you so much, Vivian. It's great to be here. Appreciate you having me on.
Yeah, it's been a while. Last time we had you on, we were diving into NFTs, and I still remember how your insights stood out and really how time flies.
Yeah.
To have you. So to start us off, your career is amazing. You have a very interesting career bridging two fascinating worlds, the traditional finance and now Web3 innovation. So could you share the story of how you transitioned from policy regulator to crypto thought leaders, and how's the journey been so far?
Yeah, thank you for asking. I've really been very lucky in my career in sort of ending up at maybe the right time career-wise, but when a lot of things were happening that I was able to learn quite a bit. It turns out, in 2008, I was in the finance and capital markets divisions of the FDIC during the global financial crisis of 08 and 09. And so right when the Bitcoin white paper was being spun up by some people, probably your neck of the woods in Silicon Valley, in Washington, D.C., we were like afraid the walls were going to fall down, that the banking system was going to collapse. I mean, it was really, really so close at times with, between the AIG bailout, the Lehman Brothers and everything. And it was a scary time, but very eye-opening as to the trust people place in their banks and financial institutions, how some of that trust was lost, and also how Wall Street really turned a lot of the derivatives trading into almost a bit of a casino that risk banks, which were really considered the most important thing as far as intermediaries, right? And so that wasn't until 2016. I worked for the FDIC for a while, and then I advised the Department of Treasury on their Making Home Affordable program as a compliance examiner. So I did all kinds of exams, safety and science, compliance. So I know the banking system really well and how institutions are analyzed. In 2016, I learned about blockchain, and primarily as maybe being used to track the deposits in a bank, because the larger banks, we sort of, were the global SIFIs, right? These large institutions, if they failed. And so where my journey began was realizing, Vivi, that they had would take like a Wells Fargo 3 to 6 months to figure out where everybody's deposits are. I mean, if you think about it, people won't wait 3 to 6 hours to know if they can't get their money out of a bank that's failing. So the idea of waiting 6 months is just unacceptable. And so when someone told me, well, you could use this thing called blockchain that could track the deposits, not a crypto use case, it got really interesting to me. So after that, someone introduced me to the Chamber of Digital Commerce, which is one of the first trade associations in the space for digital assets. I worked there for a year in policy, and that's really where the intersection began. And then I went to work for Joe Lubin and Ethereum and Consensus for about a year. And then ever since then, I've been just doing boutique advising to different companies because, that's really seeing. It's interesting how the banks were needed back in 08 to keep intermediation alive. And now sort of blockchain and crypto talks about maybe disintermediation or doing things different than the way traditional banks do. So I really appreciate the way the crossroads have come. It's made my career very interesting. So I'm very fortunate.
That's great. You mentioned 2 points. One is the trust that people place in banks. One is very problematic, and also the transparency, right? Blockchain really provides that, and the efficiency when everything is clear on chain. For those who may not be familiar with the term FDIC, this is the Federal Deposit Insurance Corporation, which is an independent U.S. agency that oversees bank risk and protects everyday consumer like you and me who deposit money in banks. So, okay, back to the point. So reflecting on your journey, what lessons from that time as a regulator that are still relevant in today's crypto world?
Yeah, I think the most important concept is two things. One was, you talked about the FDIC, which, if you have up to $250,000 in a bank, it's protected by that insurance. So it's insurance on your money in a bank in case something happens. And a lot of people lost trust. There was one IndyMac Bank case was the first real triggered bank that was out in California, where people were going to the bank with these suitcases, trying to just take all their money and bring it to put it in under their bed. And that's a lot of people that experienced the Great Depression, but that creates a lot of societal problems. One, you have the risk of all these people with money in their own homes. What if you have a fire or something and your money goes away? Also, the whole idea of banks is you put in deposits and then the banks can make loans and get mortgages for other people. But the goal then was to keep people from taking their money out of the bank, to trust the fact that they had this insurance. Yeah. And so our job was to not let people go home with any suitcases full of cash, to keep it in the bank. And it struck me, I understood why, but I also felt like there was this ulterior motive of we have to keep the banks in business too, right? Mm-hmm. So here you have this crisis. We're asking customers, even at this time, to still trust the FDIC, to trust this organization. That's still relevant now, because I think a lot of times people are still trying to understand this new generation, particularly the Gen Zers, in the US, are trying to understand, well, I can get better yield without having to go to a bank, or what does FDIC insurance really mean? And so in a way, the banks have to realize they become slightly irrelevant in that regard, and that people don't really value that insurance in the banks anymore and look for things like crypto products. So I'd say that's the first lesson, right? That lack of trust and looking elsewhere. And that has allowed crypto markets to evolve, in my opinion, because of the loss of trust of just traditional banking. The second one is really the transparency of the blockchain technology. And when I think back, is the biggest problem we had during the crisis was there was so many millions of dollars of notional derivatives. And at the time, they were very opaque. We didn't know which was the party to the other, who was the counterparty, and it was all in writing. I mean, it was really, really scary. There was no organization over what was on the derivatives. And so we learned that's why ultimately AIG was bailed out, because we knew if AIG were to fail, we didn't know the extent to which it would damage the economy. And so I feel like now, like you said before, with blockchain, we have an opportunity for the regulators to embrace this technology, to have things be much more transparent in the markets, so everyone knows, well, maybe there's too much risk in the sector and we have a chance to do something about it. And I would hope regulators would really, and I think they are finally starting to embrace that notion, rather than just, being scared of crypto because, it's something new and they're not sure how to regulate it.
That's interesting. I think we had a lot to unpack, especially when it comes to RWA, because that is actually when the two worlds actually connect. So I would like to also ask you, you've been in the crypto space since 2016 then, right? Almost 8 or 9 years now.
Yeah.
Quite a while, definitely an OG now. Share with us some of the most surprising or challenging part of being in this space. Personally.
Yeah, I think it's not as much now. But early on in 2016, 2017, no one knew what Bitcoin was. People were scared of the term. Like some companies in Washington, D.C. were told when you talk to regulators, you can't even use the word Bitcoin. And that was a different environment than it is today. There was maybe a handful, maybe 4 or 5 different offices, really Congressman Tom Emmer's office and a few others that were actually focused on this concept of what it was. Now everybody in DC is trying to make regulation for stablecoins and crypto. So it was a very rare thing. And it was also seen as really almost like revolutionary. There was that sort of cypherpunk concept from it. And I remember, even though I was an ex-regulator, like I'll never forget this one time an Uber driver was asking me what I did for a living. And I'm like, well, I used to be a regulator and now I work with this technology, and I'm explaining like how Bitcoin works with blockchain. And, you don't really need the banks anymore in this instance. So you don't need banks. And then Bitcoin is kind of a different kind of money than the US dollar. So you kind of almost don't need the government involved in that either. Mm-hmm. And when I got out of the Uber, the guy said to me, man, I wouldn't want your job. I'd be afraid someone would try to like knock me off or kill me, and I think people forget the challenging part of this is we are challenging the traditional structures, not just of the financial institutions, right? Yeah. But of the ability to make money. And for centuries, we've never had anybody really but the state create money. right? And
Yeah.
so the idea that other people might actually create that and have power over that, whereas the governments have always wielded that power, is something I still don't think people in the space get as to how revolutionary that is and how people entrenched in power are very much concerned about something like that.
Absolutely. It is a revolution, right? You're basically breaking the old world of finance and establish something new. Now we look back just in this decade or less, and from how the government approached Bitcoin to now, like we see President Trump last year at the Bitcoin conference, and this year, how everybody in DC now is talking about Bitcoin, embracing crypto. It's like day and night.
Oh yeah, yeah. I'm a advisor to the Bitcoin Policy Institute, and the vice president, Vance, gave a shout out to challenging the Bitcoin Policy Institute to come up with a solution or a plan for Bitcoin for the next 5 years for the U.S. So it was nice to hear even the vice president understanding how important this is.
That's amazing. So there's also been this tension, right, between regulatory caution and innovation, especially in crypto. So Jason, you've been quite vocal about issues like that, such as the Operation Chokepoint 2.0. So do you think there's a healthy balance to be found here, or are we still stuck in this defensive and innovation stifling mode?
So I think, and this goes back to everything we're talking about before, where the amount of trust that we have in banks, right? So when you see something like Operation Chokepoint 2.0, or someone says, hey, I do this business, whether it's crypto or whether it's I sell books or something like that, if a bank can just turn off your account overnight because of a reputational concern, that's wielding a certain kind of power that makes people really hesitant to be part of the traditional finance system. So I think the regulators need to understand that there's still a lot of hard feelings about the times when just by saying I was in Bitcoin or crypto, you could lose your accounts. I still remember a client who would constantly have all these monies and different leads for other banks available just in case the bank decided to come in and close their account one day. And that's really like living in fear. And that's no way for innovators to operate in, right? Innovators need to have ideas. They need to understand what the guardrails are, but it shouldn't just be because I'm going to innovate in a certain place that you have these risks of suddenly not being able to do anything with your bank or having to find a new bank and getting a check back. And being debanked has been a particularly onerous concept that is a bit of a stain, I think, on the regulatory structure that we have and now. And a violation of people's trust.
Yeah, definitely. It has been a painful experience. And so for the context, Operation Chokepoint 2.0 refers to the recent concerns that U.S. regulators have quietly pressured banks to limit services to crypto funds, echoing an Obama-era policy aimed at cutting off financial access to industries deemed risky. So that's what Jason's story was about, very bad for innovation. Right. The good news is we are actually in this big moment for crypto regulation in the new Trump administration. So from the FIT21 Act, a landmark U.S. House bill on financial innovation and tech, from that to new stablecoin frameworks and increased SEC enforcement and whispers of potential executive orders. So that's a lot. Jason, could you help us unpack what these developments actually mean for builders, innovators, and people in the industry at large?
Yeah, absolutely. Great question. What you're really seeing the U.S. doing in Congress right now is focused on two main things: stablecoin legislation and market structure legislation. And in my opinion, this is like a 1-2 punch for America to kind of get back on the scene with crypto, because it's going to allow an understanding of how to operate with stablecoins, where you'll have either federal or state regulators looking over the issuance of your stablecoins. And that's now being debated in the House and the Senate. The Senate called their version of the stablecoin Genius, and in the House they called it Stable. So it's a little bit of joking with Donald Trump, like Stable Genius Act. But then we'll get one of them together that'll be essentially allowing for a federal framework to help guide, avoid things like we saw with Terra Luna in 2022, allow for USDC and Circle and Tether to kind of know the rules of the road in the US. So I think that, plus the market structure bill, which is now actually was just today, the Clarity Act was voted out of committee in agriculture, and it might have already happened in financial services. It might still be going on while we're discussing it. But in the House Ag Committee, it got voted out on a very bipartisan basis. And market structure is like helping you decide, okay, what tokens are securities under FCC and what tokens are commodities and can just be traded in an easier framework as digital commodities. And so it provides the balance that people saw pressure from before. So the rules of the road are clear with the laws as to, okay, if you issue a token, it's either going to be regulated by the SEC, or if you have a little more of a decentralization touch, then it moves to the CFTC. That's, in this concept of the Clarity Act or market structure. And then you have the stablecoin bill. And Trump's ambitions, the White House has said, is they would like both of them to sign by August. For your listeners, the reason the people want to the reason you're hearing by August is on July 1st, everybody, members of Congress and the Senate, they'll go on vacation. Like August, nothing happens, Congress goes away. So basically, they have a deadline of July 3rd to get these bills on Trump's desk. And Trump's White House has talked about having a ceremony on the South Lawn of the White House in August, which I hope they have some fans because it's pretty hot out there, but bring all the, largest crypto, influencers, leaders in the crypto space out to join that ceremony of seeing these laws signed and go into law and in effect that can help both with market structure and with stablecoin legislation. But you're seeing probably news almost every day. Like I said, there's hearings today about it. That's because, with Congress, it's always a very limited time frame to get things done. So they're rushing as fast as they can, both in the House and the Senate, so that they can get bills on Trump's desk by end of July.
That's a great piece of news that we need to keep an eye on. It would have a huge impact on the market and the sentiment. So do you think that we're heading towards more clarity then in terms of policy?
Yeah, absolutely. I think we're heading toward clarity. I'm very excited about the market structure bill because I think that'll just make it clear for token holders. And I think stablecoins will start to be used in commerce as payments. The degree to which, though, in the U.S., we end up using more stablecoins, we have to remember these are still private companies that are issuing it. If you don't mind, I'd love to just very quickly tell like a story I always tell about stablecoins.
Please go ahead. Yes.
There's always this debate of, CBDCs, central bank digital currencies. A lot of people in the U.S. get very concerned about the privacy element of that versus like a stablecoin. So 98 in England, there was a shortage of pennies or pence, and peasants couldn't actually there weren't enough pence to go around so they could go buy bread at the marketplace. So what happened was the silver mines started making their own kind of currency to give them as payment so they could actually go in the market and buy what they needed for their family. And it was almost like a druid or something, this is sort of ancient person on the back of it. And it said from the silver mines, and said, this is the equivalent of 1 pence. So it wasn't issued by the King of England. It wasn't official money, but it was starting to be used in circulation. And really out of desperation because there just wasn't enough coins going around. There's a coin shortage. And so I always remind people that was really the first stable coin, right?
Yeah.
It was a physical stable coin that was used. And then at the time, the king did what he called the noblesse oblige, which is he wanted to do something for the common person. So he said, I really feel bad. All these people are going around. They're having to print out their own kind of money. Let's make some money that they can use. But again, the king only used paper money. He never actually needed to use coins because he was wealthy. So he issued this thing called a cartwheel tuppence, which was about this big, about 3 times the size of the coin. It was heavy, but it was worth 2 pence. And so all the peasants made fun of the coin because it was too heavy to carry around, and they still couldn't get a loaf of bread because they needed a 1 pence or less penny to get. So it didn't do anything. And so that was sort of your first try at like a stable coin and then a central bank digital currency, both of which had problems of actual use in society. And it wasn't until 1803 that they started printing more pennies, and, the England caught up and did what it felt it needed to do as a country, which is to make sure they're being responsible and help the citizens get money. So I say that because I think we're going to get clarity as to how to issue stable coins, Vivi, but I don't know that we're going to see how it's actually used. In other words, is it all going to work okay when suddenly we all have stable coins in their phones, and maybe there's grandmothers or grandfathers or older people that just start having their stable coins stolen off their phones because they don't know how to use it? Will merchants really accept them? So I think we have a long way to go between like a regulatory structure for stablecoins to actually seeing stablecoins used in practice, and whether the U.S. government feels this is the right direction, or do we need to pull back and create kind of our own currency. So I think history is important in that context.
Yeah, that's a beautiful story. You see the involvement of money. You're absolutely right. We need to see the real adoption of stablecoin. And it starts from the regulatory level, and which is a very good start. Staying on the policy front, just now, Senator Cynthia Lummis also called for tax law revision and saying that digital assets are being unfairly targeted. So do you agree with what she said? And how do these outdated tax rules affect innovation and entrepreneurship in this space?
Yeah, that's I've been waiting for people to start talking about the crypto taxation piece. And that's great that Senator Lummis took the lead on that. And I think you'll hear more about that in the coming days. I think ultimately there's a few basic concepts that they need to improve. One, the first and most basic is every time you use a Bitcoin in a transaction or Ethereum, as you know, you're supposed to report the difference in taxes because the IRS treats it as property. So that complicates things. There's also the reporting of it. You know, when you do your crypto trades, should it be a capital gains tax or should it be treated differently? Personally, I think we need to come up with a plan to incentivize people, because if we make it too restrictive, or it's too restrictive now to use crypto because of the taxes, people will just go overseas. And so I think that they need to think very carefully, as Trump has talked about. That's the main priority, right? Is tax reform overall, is making sure that they get that crypto tax piece right. And they've just started floating some of that. I don't know if she said the legislation is public, but I know even yesterday people were talking about it, saying it was soon to be released.
Do you think that crypto is becoming a political and even partisan issue? You mentioned that there are some bipartisan consensus, right, on those House bills.
Yeah.
But obviously, President Trump has openly embraced crypto. And while the Biden administration and also Democrats have taken a more cautious and enforcement-heavy stance. So how do you interpret this divide? And what does it mean for the future of digital assets in the U.S.? Do you see the things differently?
Yeah, this is a common question, and I think it's a little more complicated than is it partisan or bipartisan. And I'll give you the example of the stablecoin legislation. The stablecoin legislation, Democrats were concerned about it, and they ultimately most voted against it. But then when it passed, they got almost 70 votes. So there were still holdouts, and Senator Elizabeth Warren, was very kind of out there in Massachusetts, very much against it. People tend to see her as sort of explaining it for the Democrats. But then you have Senator Kirsten Gillibrand, who's the junior senator in New York, who's a co-sponsor of the bill and understands why this is important for the U.S. So I think it's sometimes people's agendas that can make it, mix it like where it seems like it's partisan. I think that when you think about it, the latest stablecoin bill in the Senate was an open amendment process by Senator Thune, the majority leader, John Thune from South Dakota. What that means for your listeners is that he was letting anybody do any kind of amendments. And so this one amendment that came from a Republican was about credit card reform that had nothing to do with stablecoins. So Thune kind of shut down this process because he had like 60 different amendments. So tomorrow they're trying to vote to just move forward without any amendments. But you had Warren, who was very noisy as a Democrat. You had Marshall, who was trying to push for it. And ultimately you saw this change because people like the banking lobby were concerned about this credit card reform bill being part of stablecoins. And what the crypto industry has to realize is we may have given the most amount of money to Trump and his campaign, but there are a lot of other lobbies besides just crypto. And we're kind of the new kids on the block. And so you're going to see the banking lobby and others come in and try to push us out whenever they feel like there's something we're doing that's sort of threatening their turf. And so that's where it really isn't so much a bipartisan or partisan issue. It's just people have certain agendas. Now, I will say that the Democrats were kind of led by Warren under the Biden administration, and they were just all really against crypto. So you saw a little bit of a revolt, in my opinion, with that first stablecoin vote, because at least a third of the Democrats sided with the Republicans saying we needed a stablecoin bill. I don't know if it may very well become an issue in 26 and 28. Some of the data shows that from the policy perspective of elections, that about 2% of the electorate, Vivi, are crypto-only voters. That means that, in other words, a single issue voter is just on how the candidate feels about crypto. Wow. And if you think about that, 2% is a huge number. If 2% of that has been enough, because we've had these razor-thin elections, could affect the next election. So it's in the Democrats and Republicans' interest to really think through what your strategy is going to be on crypto.
That's interesting. Yeah, we can't generalize. Yeah, we can't just like put put labels on, okay, Democrats is like that and Republicans like that. We also just saw Circle, the issuer of USDC, made a stunning public debut last week, pricing at $31 per share, but surging to over 100 in this first week, hitting a market cap of around $18 billion. So what does this strong IPO, Circle's strong IPO, tell us about how the world views stablecoin right now?
I think very bullish on the business model. I think people have seen like what Tether's been able to do with the amount of money they make off of the interest, and same with USDC and Circle. It opens the door for both other stablecoin entrepreneurs, like Trump's family is doing that USD1 coin that I think Justin Sun and other people are like investing in. So you see other, and that's grown to like the 7th largest stablecoin or something in a matter of months. So there's a lot of excitement about stablecoins right now, and you see a lot of different people making a play. What I also think you're going to see is the banks. Like we've been hearing the banks, I think it's like Wells Fargo, Bank of America, all joining together to create their own like mega stable coin, or one big, beautiful stable coin. And that would probably really hurt Circle and others, right? Because think about, they're already entrenched with millions of customers. And so you're going to see the banks move in on the opportunities that stable coins provide. I think it's great. Circle worked for years under a lot of pressure to do it and to come off successfully. We'll see, like, because Tether is really the leader, right, in stablecoin volume right now. And most of that is off the US soil. So I think it's really how it's going to work out for Tether under this bill, right, that people are trying to figure out. And then, but you'll see a lot of new entrants like USD1 and others, people coming up with their own ideas. That's what this legislation is enabling, right? It's not creating a monopoly for Tether and Circle. It's saying anybody can do it under these regulations. And I think that the valuation for Circle is great, but I think this is just a small drop in the bucket of the amount of stablecoin volume and stablecoins will see bought over the next few years.
Yeah, but Tether has nearly 70% or 80% at its peak of the market value globally. Do you think other stablecoins can challenge that though?
Yeah, I think they can. If the US population really starts to adopt the use of stablecoins, and like we talked a little bit before with my history story, like there's more adoption, people feel more comfortable with them. There's no stopping these banks from issuing more stablecoins that could compete with it. I think Tether plays a really important role from a US policy perspective, because we're trying to see how the US dollar can stay as a dominant currency in the world for America. And Tether's offering that right now, right? Like you said, it's 80% of the world market. People are using that. It's really, really helpful to a lot of people, because at the end of the day, people still want dollars the most. And so if we can create that in a digital form, and Tether's a platform, that I think it's great. I don't think right away you'll see a challenge to Tether's market share, but I think you'll see others grow. I don't think Tether's going anywhere. I don't know if they'll always be first, but
yeah. Exactly. There will be more newcomers in the space, new kids in the block. And so on the regulations point of view, how should the US regulators approach this space now that is clearly crossing into mainstream finance?
Yeah, I think the regulators are going to have an interesting path as these stablecoin providers are created. One of the things they talked about in the bill that didn't come through was the idea of yield-bearing stablecoins. And other people have been kind of outspoken on this, like Austin Campbell and others, because there really shouldn't be a reason why a consumer can't get yield from the stablecoin, but the bill is making it that there's no yield allowed on stablecoins. The reason for that is that the banks don't want yield on the stablecoins, because then they're afraid everyone will take their deposits and just put it in a yield-bearing stablecoin. There's a reason for that. So I think regulators are going to face a challenge, because at some point, even the banks may want to start paying yield on a stablecoin to draw customers in and have the benefit. So you're going to see that as a challenge. I think you're going to have to see the regulators go through a big learning curve. The biggest mistake we're making right now in the US is we don't allow the regulators to touch cryptocurrency or stablecoins at all. They're not allowed to hold any of it. I think that needs to change, where they can have just a small part, because I don't know about you, but it wasn't until you like hold some Bitcoin or understand it that you can actually feel, well, this is how it works. And if the regulators can't have that experience, it'd be hard for them to come up with what the policies, and regulatory structure should be.
Yeah, I know the concern, right? The conflict of interest and all that. But then if they haven't really been in the game, and they will feel very differently. Obviously, stable coins are part of the real world assets, fitting into that real world asset tokenization movement. So back to this topic, RWA, Kinsey really predicts this could be a $2 trillion market by 2030, with applications from US Treasuries to real estate and private credit. Jason, you also been very deep into the RWA space. So what sectors within RWA do you find genuinely exciting or transformative?
Yeah, no, thanks for asking. I think that RWAs are really the next step after stablecoin and market structure. And it's kind of going that extra mile of what's in the physical world that we can tokenize and make go faster. So like the CFTC Commissioner Carolyn Pham just did this great setup where they tried experimenting with the margin, paying collateral in the form of stablecoins and using blockchain technology or tokenization for that. I think that's an easy use case, right? A lot of times the margin is held in these assets that people have to sell like at lower prices during panics. So if you can create tokenization and allow stable coins, you're solving like a real world problem, allowing people to pay it off in that fashion. I think tokenization of stocks and bonds is really exciting. I think as more people see that, I think that would open up more people to the idea more than just like a Robinhood of buying stocks if it could be tokenized. And I think that's an easy one to do, right?
Yeah.
Just like we're already starting to see the treasuries. And then I think, commercial real estate is, sort of spreading the income. So maybe you could own a piece of a commercial real estate property, maybe not the whole building, kind of like, the way REITs used to be issued. REITs would be these real estate investment trusts. And I think that's another way you could tokenize. And it's like real estate, right? So the good thing about real estate to me is it's hard for that to go anywhere. Like, where the building is. If it's like gone the next day, I think when you get to other issues like gold or commodities or cattle or others, that's where it gets a little trickier, because where exactly is it? We're not sure. But I think, yeah, stocks, bonds, collateral for trading with, on the CFTC side and the real estate is where I think you'll see a lot of acceleration in this market.
Yeah, I think it also backs to the point that you mentioned earlier, right? About the trust and transparency and efficiency. I know that you've been educating and advising a lot of global leaders and also institutions on blockchain and digital assets. So could you also walk us through how tokenization actually improves liquidity, access, or ownership for traditional assets for our viewers and listeners who are not so familiar with the space yet?
Yeah, absolutely. I think that when you quote unquote tokenize a product, what you're really doing is there's implicit liquidity in the product where maybe it's just sitting there prior in a physical form. But once you tokenize, meaning you're actually trading it like using a blockchain technology, you're able to see where that product goes. And it's almost like a digital ownership of a physical thing that might be harder to sell. So it enhances the ability of people to get liquidity very fast because if people all start to trust the blockchain technology, they say, well, if it's tokenized or there's now a token that represents my home or commercial real estate, that token can just move very quickly back and forth and maybe make the sales process easier, or if it's a lease or sell pieces of it. So I think it allows for not only liquidity, as you say, and not only like the ability of people to join the marketplace, but really the fractional ownership, I think, is what's exciting because you can actually take things that we would never think, like if there was a bar of gold, we'd think, oh, either, you have it, Vivi, or I have it, right? But what if there's a bar of gold and hey, we want some gold, but so there's a token can be split in two and I get half and you get half, and that's our ownership in that gold. That's a really good way to think about what tokenization can do.
Yeah, exactly. And when it's placed on chain and the pool gets bigger, right? People everywhere in the world can buy a fraction of that asset if they like it. And it functions 24/7. Just like it brings so much access and efficiency to those assets. And okay, but on the flip side, what use cases do you feel overhyped or problematic in terms of RW?
Yeah, I think RWA, people start to think of, think of any kind of asset to start to tokenize. And I think when you think about agriculture and commodities, whether it's like corn or wheat or oil or pork bellies, people want to tokenize those commodities to create liquidity. but there's the real world problem of tracking them, right? Like, how do you know how many cows are on my farm? And I think we saw that a little bit when we tried to do the carbon credit concept, right? Like, I can buy a tokenization of a tree that's not going to be cut down in the rainforest in the Amazon. How do you know that tree isn't really cut down? Was anyone going to cut that tree down to begin with? It's a great concept, right? To improve the environment. But how do you really trace the viability of your token? And I think that's what's so important, because even if you have the on-chain ability of seeing the value, of seeing that you own something, that doesn't translate to like, whereas I think with stocks and bonds, like I have one share of IBM, I have a treasury bond or treasury note with this. The people understand that. But if you can't trust that you really have full access to that underlying asset, that's where you start to see problems in the US use cases that people apply to RW.
That's true. A lot of people fall into that trap even before this cycle. So are we near a tipping point here, or are there still some major roadblocks in the way for?
I think the roadblocks probably are people aren't sure about the regulatory clarity of using RWA tokenization. And there hasn't really been a law or bill that's been introduced. There's been talks about whether it's necessary, even maybe people's interpretation of it. So we're sort of leaving it up to regulators. And to be honest, it's such a large market, as McKinsey predicted. But right now, there's only a certain amount of attention that we can make our legislatures pay attention to us on the space. And right now, they're all focuses on stablecoins and market structure. So you talk about RWAs, that's like a 2026 thing. Like right now, they're busy, they're focused, their heads down. They want to get a stablecoin bill to Trump. They want to get a market structure bill to Trump. So as much as an RWA concept might be interesting to them, there's a lot of questions with it. The questions start with, well, like, is it gold or is it real estate? Like, does that mean it's under real estate regulations? Or does that mean it's under like the CFTC or trading regulations? Like, who's the regulator for RWA? And these are very complex questions that have to be answered. And it's going to take a while to figure that all out. So, in the meantime, again, they want to get Trump has asked for a stablecoin and market structure bills to be over at the White House by August. So I just don't think you'll see a lot of talk about it where people can do stuff where they feel like there's regulatory clarity to it until sort of the end of the year, early 2026. And I think that's why you may not see the market boom right away. It might take till next year for people to really focus on it and see the market accelerate. Because businesses, if they don't have the regulatory clarity, they don't want to get too involved in it.
Yeah, definitely. One step at a time. So they definitely need to watch out the risks, right? And I know that you've been also traveling around the world and advising policymakers and institutions. So when we look around the crypto markets globally, like we see Hong Kong also reopen retail crypto assets, testing stablecoin frameworks, and EU is rolling out MiCA, the markets in crypto assets, to regulate exchange and stablecoins, and just so many things happening around the world. So from your global policy experience, where exactly does the US currently stand compared to these regions?
Well, I think the US has been behind for some time, right? And you have seen Hong Kong and others start to accelerate. I had the pleasure of going over to Hong Kong to talk there. And that was courtesy of my good friends, Kevin Goldstein and Coco Key of Key Global Advisors. And they spoke as well. And I think Kevin made a really good point, because when you think about it, America was starting to accelerate, but then you saw the tariffs, right? And that was really a concern. People were taking a step back, like, wait, what's the US trying to do here? So it wasn't clear what the strategy is. But what you found being there was, like in Hong Kong, they thought they were ahead with their stablecoin bill. And all of a sudden, Trump comes out. It's like, I want this all done by August. And you have everyone scrambling. Now, Europe's kind of set the stage, right? They have the MiCA regulations, still trying to fine tune some of the elements of that. And so I don't know. They're very conservative, I think, in their nature. I think you want to look to something like the United Kingdom or Dubai that's like taking more risks or creating more excitement. I think those could be larger economies that would sort of parallel what the US could do. I think the US is like a big ship, right? And so it's like going to take a while for it to turn. But it is turning. And that's when people start to see the United States do something. That's when you see other people in other countries start to take notice and try to accelerate their own, which is exactly what we saw, of people realizing, wow, we better step on it a little bit in Hong Kong because of what we're seeing Trump do in America.
Yeah, that's true. The ship is shifting in the right direction. Yeah. So if you were advising policymakers directly, what specific steps would you recommend to ensure America remains a hub for innovation, while still, on the other hand, protecting consumers?
Yeah, I think like there has to be a balance, right? With like stable coins, like with this regulation, there needs to be like clear disclosures so people know what they're getting when they buy a stable coin. There also needs to be a clear bankruptcy process. One of the issues in the Genius Act that I don't know if they finally solved is they really need a trustee to properly do the bankruptcy. Because otherwise, if you go bankrupt, it won't be clear you get your stable coins back. So it has to be fundamental. Like if something happens to the company, that you at least get your stable coins back at the value that you have them, or have the disclosure to explain that that's a risk, right? So I think there has to be protections for people with stable coins, because when you buy a stable coin, it's a lot differently than if I buy a DeFi or meme coin or NFT. Like when I buy a stable coin, I'm thinking I'm going to have a one-to-one value. Like if I buy 1,000 stable coins, dollars, I expect my $1,000 to be there. If I buy like, some NFT, I know it might go up in value a lot, which I hope, but also might go to like zero. So we have to be careful when we understand the expectations of people around stablecoins. That has to be number one. Number two is I think there's the consumer protections, but also the investor protections. I think the last 4 years, you've seen a lot of violations of consumer protections because it's been the SEC that's been lashing out at the community, like suddenly saying, hey, this token is a security. The token drops in value. But what if you are holding like a large portion of the token that they said is now a security and you lose all this money because of what the regulator does? That's not the way the American economy, as I know it, was developed, and it is not the country that I live in. We're supposed to have a free market. The regulators aren't supposed to influence the market. So it's something like market structure, I think, by protecting the investors, so you know what kind of token you have, that'll enable people as they invest or buy tokens to have more, consumer protection without you don't need a disclosure or anything. You just need a law so it's clear. So you know if you're holding this token, one day the SEC isn't going to come in and say, hey, that token's a security, and you lose almost all your money.
Yeah, we need to protect consumers from being scammed, and also we need to protect investors as well. I hope the U.S. regulators really listen to your feedback. I know they also give training programs for state departments and also through think tank and educate policymakers. From that vantage point, what are the biggest blind spots Congress or regulators do have when it comes to crypto?
Yeah, I think we were giving education. It's through our nonprofit Value Technology Foundation, where Whitney Kalmbach is the CEO, and we would deliver to the Department of State, go around different countries like Indonesia, South Africa, help them understand what cryptocurrency and blockchain is. It's a 3-day course, sometimes longer. It was on behalf of the Department of State. And right now, the blind spots has to do with understanding, as I said before, the regulators not being able to actually use the crypto to make sure they understand it. I think there needs to be training courses on that. I think blockchain technology is still very difficult. I think people sometimes say now in like Capitol Hill, oh yeah, I understand what blockchain is. That's a very difficult concept. That's like saying, I understand how the internet works. I don't understand how the internet works. I just know I'm able to connect, over Zoom or do all these things and surf online. I don't think most people care too much about it. They just want to understand what the impacts are. And what we have to remember is because crypto is a marketplace that's providing financial services to people, whether it's DeFi or anything, you have to understand that's something policymakers are going to take pause and want to understand it, because those are financial services that, yes, consumers could get harmed, investors could get harmed. Is it creating national security issues for us with privacy? So I think it's the education. It's still key to helping both in the House and the Senate, and also the regulators. Some of them do understand it very well, but the more broader folks understanding what this is and how it works, there's still quite a lot of misinformation that I've heard, even from senators, not explaining this technology right. Sometimes that's by design, right? Like I've heard Senator Elizabeth Warren explain blockchain, and it's been incorrect. I think she knows how it works. She just wants to think it doesn't really work at all. There's an ongoing need to educate.
Yeah, there's a lot of misinformation, misconception about crypto and blockchain technology still. And the regulators definitely need to be in the space that they really know fully and been really in the game. I like what you said about the feedback on, for example, the Genius Act about the bankruptcy protection, because we don't want consumers to, go back to the terror moment when the stablecoin just collapsed and everybody just lose their money. And in order for stablecoin to go mainstream, you definitely need that in place. Otherwise, the adoption would not take place. That's a really, really good point. Just curiously, what's your take on the bigger crypto market so far? Because there's been a lot of confusion. Is it a bull market? Is it a bear market? And where are we heading? What is your take?
Well, I think to me, I mean, crypto always seems to go up. It depends which ones you have, right? So should it matter what market you're in? And I think a lot of times we have to think of what Warren Buffett used to say, which is if you're seeing a down market, that's an opportunity to buy. I still remember a few years ago, someone asking me at a holiday party, should I buy Solana? Because it's at $14 right now. And I didn't say it because I don't like to give financial advice, but I was like, of course you want to, because it just seems like it's one of the larger cryptos that's going to do really well. Right now, we're absolutely in a bull market. And that's mainly because we've seen a change of regulation and an approach that is because of a Trump administration, a Republican administration, and also a Congress and Senate that are also all Republican. And they've embraced the technologies. Again, like I said before, businesses love it when you actually have regulatory clarity. So you're only going to see, I think, this market continue to do well, probably over the next year or two. Not financial advice, but certainly I think indicators show it should do really well. Now, the downside risk to me is people talk about Trump and how excited he is about crypto, and other experts like myself have said he's almost too excited because he's opening up so many of his own projects.
Yeah.
That if he opens a project and that goes the wrong way, and then the Democrats in Congress have something to kind of beat him over the head about, that could maybe spoil the fun. You know, they're like, it's great that we have a president that likes crypto, but he loves crypto. He's opening up projects all the time. So we'll have to see how that goes. But I think overall, yeah, I don't think you can go wrong with crypto right now. Building your own business, not just trying to create or buy a certain crypto for the market. I mean, I don't think there's ever been a better time if you have an idea to look to venture capitalists or, you know, working on getting a team together and developing what your idea is, because right now there's money there to back that project.
Lots of optimism. So what are the themes that you are more bullish on? You know, like there's been deepin, there's RWA, there's AI agents, and the Bitcoin ecosystem, Bitcoin layer 2, Ethereum scaling, Solana, obviously, with all the meme coins. So among all the things, or maybe some more, which kind of narratives excite you?
Yeah, I'm really excited about the Bitcoin narrative right now. We're seeing so many of these treasury companies with buying Bitcoin around the world, you know, replicating a little bit of what Michael Saylor did, although no one's going to ever catch up to what he's accomplished at strategy. But I think it's more than just buying the Bitcoin. I think it's as banks will have an opportunity to custody Bitcoin. And when people see that that's done safely, I think a lot of people love Bitcoin. They want to have it, but they're a little afraid because they're like, I don't know if I want this wallet or how I'm going to hold it. The minute the banks are able to do it and understand how to do it, like, and you can walk into Wells Fargo and you take some money out because you go to dinner, and at the same time you have $500 in Bitcoin you want to just drop off in your Bitcoin safe, then I think you'll see true adoption. I think it starts with Bitcoin, because Bitcoin do see that as a strategic asset. Solana's growing. You know, they just had Solana Accelerate. I was really bullish on the Solana Policy Institute. That's growing in DC. So I think Solana's on a good path. Ethereum too. I know there's some questions about the Ethereum roadmap, but I think Ethereum, a lot of people are saying, are kind of undervalued. I think they were always going to have competition because Ethereum was the only one right now. Companies like Solana or programs like Solana, I think, have that ability to be competitive. And in terms of RWA, I really like Chainlink because Chainlink has done some great stuff on the RWA front, and obviously focusing on those oracles and the backing of the sort of proof of bills, like where you have to have proof of something. I think that'll help accelerate the RWA economy.
Obviously, this is not financial advice, and this is only for education and entertainment purpose. So we are on this Crypto for Good series, and we always zoom out because what you do is the idea that crypto can be more than just financial engineering, more than just speculation. It could actually bring the real benefits to more people. So what does crypto for good mean to you personally, Jason?
That's a really good question. To me, crypto for good means that so often people explain crypto as like only being used by terrorists or being used for money laundering or illicit financing or even nuclear proliferation. But people always have to remember that, you know, anytime you create a new financial product, bad people are going to use it just like good people. It doesn't make the technology bad. So I think you have an opportunity with crypto to build really smart and wonderful things. And I think the innovators should feel embraced by this new administration in America, to not feel like they have to be on the defense, to be able to innovate what they want, to create products that are, in their definition, something, whether it's to protect privacy, whether it's to open up a new marketplace, help people do certain things that they couldn't do before with money, like in DeFi. That to me is where you're seeing the crypto for good. And knowing that you're developing something that is for good, even if you still have regulators or people, holdovers from the last administration, who are trying to tell you, no, that's crypto is only for evil.
Well said. But and at the end of the day, technology is neutral. It's a tool. It depends on how you use the tool, right? The same
Yes.
can be said about AI. Bad people can use AI to do bad things too. The internet as well, because bad people are using the technology and you ban it and then you label it as a bad technology. Like you said, there's so many assets and so many good things that crypto and blockchain have brought to people. We just need to understand it and use it properly, right? Regulate it properly to protect the users and so that we can be in the right place. So, okay, we're coming towards the end of our show. For viewers and listeners who want to follow your work, Jason, or stay updated or even explore ways to collaborate with you, what's the best way to find you? And also tell us any upcoming projects or initiatives that you would like to share with us.
Thank you. Yeah. The best way is really on X. If you DM me on X, I'm at Regulatory Jason. That's my name, just at Regulatory Jason. You can also reach me at jason@keybridgeadvisors.com by email. And I'm happy to talk to you about whatever, you're thinking about, questions either from a government or from an institution. Regarding upcoming projects, I'm actually in the midst of writing my first book, and I'll be introducing it at the end of the summer. It's about the global financial crisis, my experiences during that time from a firsthand view for people to see what was happening. And then, in my opinion, how that opened the door and allowed crypto to develop. Because I don't think we would have had Bitcoin and crypto develop the way it did had we not had that initial loss of trust that we saw during the crisis. So I'm looking forward to sharing my story. I think there's a lot of interesting tales, and yeah, coming out soon.
Wow, looking forward to the book and let us know, and then we would like to go to Amazon to buy it and read it. Can't wait. Thank you so much, Jason. It's been
Thank you.
A wonderful conversation and we learned so much.
Absolutely. Thank you again for having me on.
That was a fascinating conversation with Jason Brett. What struck me the most was Jason's reminder that trust and transparency are the foundation of real innovation. We talked about how the 2008 financial crisis shook our faith in traditional systems and how blockchain, stablecoins, and real-world asset tokenization offer a path towards rebuilding that trust, making finance more open and accessible for everyone. Well, I also like how Jason talked about the importance of regulatory clarity, which isn't just a policy goal. It's essential for giving entrepreneurs the confidence to build and for consumers to use all the new crypto tools and products. And this is exactly what Crypto for Good series is about. Technology as a force for greater fairness and real-world impact, not just speculations. And I think Jason said it very well. It's about empowering good people to build solutions that reach beyond profit and create lasting value for society. Well, if you enjoyed today's episode, please like, subscribe, and share and help us keep the conversation going. And remember, at Vivi in the Valley, we'll always be exploring how technology can serve humanity with purpose, with heart, and with soul. Until next time, stay thoughtful, stay curious, and keep building with soul.